Thank you for tuning in to another episode of the Yellow Room Podcast. I'm Nika Hansen, your host, and I want you all to be great. The Yellow Room is all about empowering you to unleash your full potential in every single aspect of your life. And I hope that you've received just that up until this point. If you consider yourself a part of this great Yellow Room community, be sure to do me a few favors. First, subscribe, rate, and review this podcast. Secondly, if you enjoy any of the episodes that I put out or today's episode, help me to extend my reach by sharing it with a friend or two. Again, thank you for tuning in. Hello, Yellow Room family. Welcome back to another episode of the Money Move series. Today, we will be talking about something that needs to be talked about, and that's life insurance. We all know we need it, but some people choose to ignore the importance, and some people also are unaware of actually life insurance being a wealth strategy. So today I brought on a life insurance agent. Her name is Ebony. She is great. This warning is not a dry conversation as you all may think. You know, life insurance is no fun to be talked about, all of that good stuff. However, she breaks it down in a very relatable and understanding way so that you all can really get a great understanding of what life insurance is all about, the different types of life insurance, and how to choose what's best for you. So a little more about Ebony. She is a native of Montgomery, Alabama. She grew up in the Army life as her mother was active duty. Ebony experienced the opportunity to travel the world and see life on a grand scale. Through this experience, she was taught and learned early in life the importance of saving, life insurance, and securing the right financial products. With Ebony's passion for finances, it was no surprise that Ebony earned a Bachelor of Science in Business Administration with a major in finance from Auburn University and an MBA in International Business from Mercer University. Throughout her career, she's led finance and accounting departments in various industries as a credit supervisor, accounting manager, director of finance, and 401k plan administrator. She continues to serve her greater purpose in life of creating financial awareness through her business consulting firm, Ruffin Consulting Services. Through Ruffin Consulting Services, she offers effective business solutions for business owners and families with life insurance products and living benefits. It's not just Ebony's foundation and education with money that's important, but it's her real life experiences that lead a greater value to her passion of creating awareness of the need for life insurance. Clients often consult with Ebony because of a referral, but later become repeat clients and continue to refer family and friends. She is known for her ability to explain the fundamentals of life insurance and help her clients identify the best type of life insurance for their needs. Some of her clients' testimonials encourage her to share the word of life insurance daily. A glimpse of what her clients have said and shared about their life insurance experience with her. I learned so much from Ebony. She is thorough and has a passion to serve. She breaks down the benefits of life insurance and will help you find the right policy for you. Because of Ebony, 3 of my family members now have life insurance. She is professional, provides guidance, and great customer service. I can attest to this. I've been knowing her for such a small amount of time, but she is high-key professional. It's very obvious and evident that she is passionate about what she does and she knows her stuff. So again, I hope you all enjoyed this episode, and trust me, it's not the typical dry life insurance discussion. It's like girl talk, so enjoy. Hello, Yellow Room family. Thank you all so much for tuning into another episode of the Money Move series. Today, we will be talking about something that is very, very, very important, something that we all know that we need, but GoFundMe's are on the rise. There's different fundraisers and all of this other stuff to raise money when there's time to bury someone. So today we're talking all about life insurance. I think especially for the younger generation, it's something that we know we need to have, but it's something that we put off for years and years and years because we just think that we're so invincible. And then there's another side of life insurance where it could be used as a vehicle of wealth. So today we have a very special guest. Her name is Ebony. She's an insurance agent, and she's going to be talking to us all about life insurance. I hope that you all thoroughly enjoyed today's episode. I know you all will. It's very valuable and beneficial information. And please do us both a favor. Go ahead, as we're discussing everything today, jot down those family members, names, friends' names that you know don't have life insurance, and just go ahead and premeditate on sending the link to today's episode, because I'm tired of seeing GoFundMe's. Without further ado, Ebony, if you can go ahead and introduce yourself to the Yellow Room family. Tell us a little more about your story.
Thank you so much. Hello, Yellow Room family. My name is Ebony Ruffin. I am your #1 life insurance agent on a mission and purpose to change the narrative of life insurance across the globe. I am a woman that was born in Montgomery, Alabama, raised by a military mom. And so therefore, I had an opportunity to travel the world as a military brat. That's what people would call the dependents. And through that travel, I gained a significant amount of exposure to financial planning, savings, just different things that the Army taught my mom. She then taught that to me in a household. Life insurance. So many of you all, if you're from the South or you have family in the South, you know, back in the day, all of the communities were fairly close knit. And so that was no different for the community that I was raised in Montgomery, Alabama. And we literally had a life insurance man that would come to the home and he would visit the neighbors. And so on this particular day, I knew someone special was coming to the home because my grandmother was getting everything prepared as a Southern woman would do. And we were actually able to sit in the living room. And if you all know anything about some households in the South, the living room is, you only walk through there. So when it's a fine meeting, that's where the meeting gets conducted. And so the life insurance man met with my grandmother. At the end of that appointment, she told me these were important documents that she was rolling up to hide in her bedroom. And so that is where I began to have an understanding of life insurance. I didn't know why or how I would apply it later in life. Fast forward, as I was being prepared to go off to undergrad for college at Auburn University, my mom took out a life insurance policy on me. So that's kind of weird, right? You're getting ready to go to college, and the last thing you expect to do is sign paperwork for life insurance. But that's what my mom had me do. And it's a permanent life insurance policy that I still have to this very day. It has a nice size cash value accumulation. And so once I received a statement in mail, I began to ask questions and do my own research. And that's when I knew there was power behind life insurance, because I said, wow, you know, how does this policy or this paperwork mom has this balance in the savings account? So that's when I knew that there was something special about cash value accumulation. And then as I went into my career in corporate, I was a director of finance for a law firm, and they had key man insurance policies. So all of these bits and pieces led me to where I am today, to be the changed agent and leader to change the narrative on what it means to have life insurance as a wealth benefit and not a death benefit, or not just a death benefit.
I like that. It's not just a death benefit, it's a wealth benefit. Okay. Well, yes. That being said, can you give us an overview of what life insurance is and then the different types? I know for myself, I know I have a policy, but honestly, I do not understand all the details of it. I know that I have my own separate policy. I know my parents have one on me, and I also have my own personal one, but I probably do not understand the details as much as I should.
Actually, that is a fair comment to say, because while most people may or may not have life insurance, but for those that do have life insurance, you do get the feedback a lot about, well, I know I have it, but I don't know what's in it or what it's supposed to do. And I think that's where the responsibility is on the agents and brokers to ensure that we're not just selling the bells and whistles and features and benefits, but we're selling the core need of life insurance coverage, and everything after that is a great benefit to the client. And that goes back to seeking first to understand from your client, and then providing educational resources so that the clients can truly understand what they have. So one way that I like to just share with people just the simple understanding of life insurance. You have two parent level of life insurance. And by parent level, I mean like at the highest level. You have permanent life insurance and you have term life insurance. So very simple. Permanent life insurance is what most people say, well, I want one of those cash value policies. You know, what's that thing that they say you can save this amount of money? So that's what we usually hear in the market. That's actually permanent life insurance, where you have several different types of permanent life insurance. So you could have whole life, universal life, indexed universal life. Permanent life insurance, I would say, think of it more like a mortgage. You have this property, you're paying on it and hoping that there's a return on your investment later in life. Permanent life insurance is the same way. You have the policy and the coverage for as long as you're alive. But in addition to that, for most people, they don't want to feel like they're throwing their money away every month. And I know it's kind of crazy to use that phrase, but most people feel like if I'm paying an insurance company money every month, I want something out of it. So for the permanent life insurance policies, the something is the cash value accumulation. And then that's where it comes into play a sub account. If you have a premium for $100 a month, maybe there is a portion of that is being directed to a cash value account, which the insurance company will then, it grows from interest crediting. Term life insurance is similar to renting. So when you enter into a rental agreement, there's a set number of years or months. The same thing with life insurance. So you could have a 30-year policy, a 20-year policy, 10-year policy. The premium every month is the same for as long as the policy is active. At the end of the policy's term, then you have the option to renew that coverage. And the component here that most people usually aren't happy about is you're renewing the same amount of coverage, but your monthly premium will drastically change. And if you think about it, if you're a 20-year-old male and you get a 30-year term policy, at the age of 50, your cost of insurance is going to be much higher than it was when you were 20. So that's pretty much term life insurance coverage and permanent life insurance coverage.
Oh, so what's more like preferred? Like what's the better of the two?
So good question. When I work with clients, I do not push one type of life insurance coverage. I like to assess their needs, understand their budget, and where they plan to go long term. But if you have more of your listeners that are in tune to Dave Ramsey and Susie Orman, they like to teach more of buy term and invest the difference. So most people hear that, but they're not quite sure how to apply it. And so what that means is, say, for example, John Doe has a $100,000 policy. And if it's a term policy, it could be 30 years and maybe the cost of insurance is $20 a month. John Doe, we could say he's a 20-year-old male. if you look at that same face amount, the 100,000, and the same person, same age, same sex, if it's a permanent life insurance option, it could be $100 a month. So you're looking at a difference of $80 a month coming out of your household for life insurance coverage. So when you follow more of a Susie Orman or Dave Ramsey approach, they say buy term and invest the difference. So you would buy term, which is that $20 a month, and then you would take that difference of the $80 between 20 and 100 is $80, and you would invest that in the market so that you're building a nest egg for yourself without paying the cost of premium for a permanent life insurance policy. I personally have permanent life insurance. And the reason why I have permanent life insurance, I have two types. I have a whole life and I have an indexed universal life. I chose permanent life insurance just because at the age that I got the policies, I was so young that the cost of premium was a no-brainer for me to be able to continue to pay for the life of the policy. And when I look at the cash value accumulation, it actually makes sense for me to have purchased those permanent life insurance policies.
Oh, okay. I get it now. See, I listened to Dave Ramsey a lot, and I've heard him talk a lot about term life insurance, but I still did not understand it the way you broke it down. I like how you explained like permanent is like having a mortgage, and then term is like renting.
Yes.
So I get it. Now,
and also too, I think people should understand that when making these decisions, life insurance is a business as well. And like any other company, life insurance companies, they have models of how to, the customer is number one, but life insurance is still a business. So when you think about it, most people, like say, for example, if you get a 30-year term, most consumers feel like they've wasted their money, and the likelihood that an insurance company would pay out the death benefit on a 30-year term is slim to none, because most people aren't dying during that 30-year coverage. So then when it's time to renew that term policy, you typically don't see a high renewal rate because you have a spike in the premium every month. So you're telling this person that's paid, a certain amount of money for 30 years that to keep the same coverage, their premiums are going to drastically increase. And most people, they are not in favor of that. But term life insurance coverage can be a great vehicle, specifically, say, for example, you have a family, they have children that are, going off to college or moving out of the household, and the children aren't quite financially independent just yet. So in the event that something happens to you, you want to make sure that not only are they able to cover your burial expenses, but they have some money to be able to continue to figure out exactly what they want to do in life, or not be totally without additional income because their parents are there. So I think you have to assess the situation and the need first, and then present the options.
Do you ever come across people who have both term and permanent life insurance?
Yes, because what people do is they'll layer it. So say, for example, let's just say you have a 33-year-old female. She's at that point in her life where she's like, okay, either she's running her business or she's doing something in corporate. She, at this point, understands that life insurance is very important as part of her financial plan. But when you look at your budget, you may realize that, hey, I can't afford $500,000 in a permanent life insurance coverage, but maybe I could afford, $250,000 in permanent, and then maybe do another $250,000 in term. So you get your $500,000, but then when your term expires, you still have your permanent life insurance coverage at the rate that you would have purchased it at the age of 33. So some people will do what is known as like a layering of life insurance policies.
Got you. Now, this may be a stupid question, but I just want to make sure that
No stupid question. No question is stupid.
So if let's say if I were to get a 10-year term policy, right? And I pay into it for 10 years, at the end, once it expires, if I don't renew, do I walk away with anything?
Did you die?
You're right. No.
Uh-huh.
Wow. Okay. So now I see why people would be like upset.
Yes, and then also think about it. So here's one thing to know about term life insurance. You can convert it to permanent life insurance. So when a consumer is working with an agent and they choose term life insurance, there is the option to convert that term into permanent up to a certain age or within so many years of having the coverage, and you don't necessarily have to go through insurability again. But people are upset, but they don't realize it's no different than having car insurance and paying, I don't know, $140 a month for car insurance. And no one's ever mad that they don't get anything in return from the car insurance coverage. But people are upset when they don't get anything in return for life insurance coverage when it's a term policy. Because when you have renter's insurance, homeowners insurance, car insurance, all of those expire. And when they expire, you're renewing your coverage and your rate can increase. But no one's ever upset like, I am not going to keep my car insurance because I didn't get anything before it's time to renew. They go ahead and renew it. And what I think it is people respond to a controlled mindset. So no one is sending the message that you should have, I don't know, at least $50,000 of life insurance coverage. No one is requiring that, right? So it's left up to the consumers to, either be in corporate and through their benefits, through the human resources department, they may have 50,000 or 75,000 with their job. And most people think that they're fine, but no one is controlling the narrative to say, if you do not have life insurance, we're going to fine you. Because we all know what happens if you don't have car insurance. We know most places will not allow you to move into an apartment community without proof of renter's insurance. You're surely not going to have a mortgage or a home and not have homeowner's insurance. So people will prioritize insuring those things before they prioritize insuring their life. And I just want people to take a moment and think about that. Why does someone have to make you get life insurance on your own life, which is your most valuable asset?
Right. And if we can...
Oh, that sounded like a read. I like that.
It did. I want to kind of touch on the whole life insurance through your employer. So I know I have a life insurance policy through my employer. I actually work for an insurance company. I'm in the auto insurance industry. They provide life insurance. So it's pretty much all I know about it really is that it's half your salary. So if you make $100,000 a year, then
you get $50,000 in coverage.
$1,000 policy. But I really don't know what it is.
So it's a term. So personal.
I have my own personal life insurance policy outside of it because
yes. Okay, moment of applause. Yes, very good.
Well, the thing is, okay, so I'm gonna be honest. So my parents, my mom had a life insurance policy, and my dad had a separate life insurance policy. And I remember right before I turned 25, my dad had called me and was like, the life insurance policy, he said, do you have life insurance? And I was like, yeah, I have it through my job. That's like, I had it through my job. And he was like, no, you need to get your own life insurance because the policy that I have on you is about to expire. Or it was something about me turning 26. I can't remember exactly.
Oh yeah. I know exactly probably what it is. When your parents got life insurance, they probably added you as our term rider on their coverage. So then when you turn 25, you would have to come off of their coverage as a children's term rider and either take on your own policy. So something probably triggered the life insurance company that you reached of a certain age where you no longer would have that children's term coverage. Props to your father, and props to him like actually calling you and having the discussion and not just making the decision that, well, she's fine, she's grown now, she has a job, she should be good to go.
Yeah, because I was like, I mean, honestly, that's not, I mean, I work in the insurance industry. I know the importance of insurance on, all things, but it's not something that literally was crossing my mind at the time. So I'm like, okay, well, let me look into this or whatever. And I knew when I first started at my company, the first day, I feel like, it's like a one-on-one type thing. They were going over the benefits that they provide. And someone like who had been at the company for a long time, people got excited when they were like, oh yeah, we provide our associates life insurance. And the lady was like, but don't rely solely on it. So I remember her saying that, but it kind of flew over my head. When my dad mentioned it to me, I was like, yeah, I have life insurance through my job. And he's like, no, you need to get your own. And I was like, that lady did tell me that I should not be just relying on this insurance policy. But like, how does like the employer, what are the pitfalls of someone just relying on just having insurance through their employer?
So the pitfall of relying on life insurance through your employer is that you only have that coverage while you are employed. So let's take someone maybe that's coming right out of undergrad and they're going into their first job. More than likely, they're probably young, healthy. Their cost of insurance outside of their employer is slim to nothing. Low risk factor. So that would be a good time to seek insurance outside of an employer, right? But say, for example, you go and you stay at this company for 20, 30 years. You are fired or you are let go for whatever reason. And now you no longer have life insurance coverage and you're on the market 20 or 30 years later seeking life insurance coverage, and your cost of premiums are going to be much higher. So when you look at life insurance through an employer, look at life insurance through your employer as your plan B and life insurance outside of your employer as your plan A, so that in the event you're no longer employed, you're still always insured when you have your own coverage. In addition to that, the coverage through employers is more like a group term plan. So the same way that we have low cost medical insurance through an employer, you have low cost or no cost life insurance. But if you were to go on the market and try to apply for that same coverage, you will see, you will either have a premium that you're not accustomed to, or you will have a higher premium. So it's important that you look at life insurance outside of an employer, A, so that you're always covered with insurance, even once you're separated from your employer. B is you have more leverage to make decisions on a plan that's better fit for your needs in your household. So whether that's you need a higher face amount, you would like a cash value option, you would like to have living benefits, you have more options outside of your employer. And I would say a third factor to that is if you're young and you're going to work for a company, you should use your age to your advantage to seek life insurance coverage outside of an employer, so that in the event you change employers or you decide to become a full-time entrepreneur, you would have already locked in a wonderful life insurance rate at a low cost because you did seek life insurance coverage at a younger age.
I'll be right back after this message. Today's episode was brought to you by Anchor, my podcast host. I chose Anchor to host my podcast for several reasons. Number one, it's free. to the convenience. They have several creation tools that allow you to record and edit your podcast right from your phone or computer. They even distribute your podcast for you so it can be heard on many different platforms such as Spotify and Apple Podcasts. You can make money from podcasting. Yes, you can make money with no minimum listenership. If you're interested in starting a podcast today, everything you need to know, you can learn at anchor.fm to get started. Thank you. Got it. Okay, I don't even know why I'm thinking. I was thinking like when people, like when my dad and the lady was like, don't rely on it. I'm thinking, oh, well, maybe if you die on the job, they'll cover it. That was the rule for it to apply. But okay, that makes sense.
Actually, what you say makes sense because most people would probably think like, okay, this is only as good if I died on the job, but they probably don't even take it as far to know that the coverage is, if they passed away outside of the company. So that's actually a good point because for those that are listening now, they probably have a better understanding that, okay, I know I need something outside of my employer, but in the event that I passed away, whether I'm on the job or off the job, at least I still have this basic coverage.
Yeah. Okay. And like, I know, so I work for an auto insurance company, and I know that when I first started at the company, I was more in the call center environment, and we would get calls about like there being myths about like insurance. So you would have the mailman that would be afraid to get a quote because he thinks that, by him being a male, his rate is gonna be, much higher, or because he has a red Camaro, it's gonna be much higher than black Camaro. In the life insurance world, are there any differences in like men getting a life insurance policy or versus women getting a life insurance policy? Like, do you see like more women more open to getting a policy, or like, are there any differences between the two? I guess what I'm trying to say.
Oh, so awesome question. I work a lot with families, and I'm primarily working with the woman of the family to take on getting the family insured with life insurance. And I must say that when working with a family, I definitely prefer to work with both partners together because it makes the decision making more of a team effort and everyone can ask their questions. I have had a lot of clients where the male partner spouse is not on the ride for life insurance. So here are a few reasons why. Most men don't like to think about death, or when the woman is planning for these type of financial products in the home, they're like, okay, so what are you going to do next? Kill me? Or why do I need a life insurance policy? And you even have some people that have a mindset of when I'm gone, and you all should prepare for it now. I'm not getting life insurance. And as drastic as that may sound, it's the reality of the mindset of some people. So I have had clients where the woman would decide to move forward with life insurance for herself as well as the children, but the spouse would not get it. Or I've had where the male spouse has been declined or they've been rated, which means that I would have received feedback from the underwriters that this male, because of certain conditions, the cost of insurance is much higher. And then maybe within a year, depending on the change in their health or weight or just whatever it may be, they may consider, rewriting the policy. So I would say there are myths, and some of the myths are men feel that they, don't need insurance, or, why would we pay for something like that when we could just prepare for it? They do not want to have the conversation. And for some of the women, a lot of them are meeting me on social media or they've been referred to me. So you're also adding that component to it when you're explaining to your spouse that, I found this amazing agent on Instagram or Facebook and I want to talk to her about life insurance, because men just are not on social media looking for a life insurance agent. So that's kind of that's another component that adds to them processing the whole life insurance conversation.
Got it. That makes total sense. To me it does.
Yes.
I was thinking, I'm like, okay, I'm pretty sure it's harder for men to wrap their head around the whole concept of life insurance. Not to be sexist, but I have that inclination.
Yeah, I posted this on my page a while ago, but many years ago, T.D. Jakes had a recording and he talked about when, starting off and having the church, the first thing that he had to do was get a key man insurance policy. And that's because more than likely men are dying before women are dying, right? And the component to that is life insurance for men are much higher than it is for women, because the likelihood of them passing away sooner is higher than it is for women. So it's very important for men to try and seek life insurance coverage when they're younger, just from the simple fact of cost of insurance. And this is before even factoring in their health as they get older. And another component is most men are afraid to apply for life insurance because they feel like if they haven't had a physical or an exam in, a long time, they feel like they may not be approved for life insurance. And that's not always the case.
Got it. Now, while we're on that subject about having to get physicals and exams and stuff during the application process, what are some of the things, like for someone, some of the audience who may not have a life insurance policy and now they're considering it, what are some of the things that they can expect to be on the life insurance application, and just things that are a part of the overall process?
Oh, so that's a great question. And the reason why that's a great question is that's another area that deters people from applying. They feel like they don't know what's on the application. And a lot of people may not be comfortable talking about their health history or disclosing certain things. But a life insurance application, it will start with your basic information, your name, your address, your phone number, your social security number. Then it will go into a section of lifestyle questions. So it's going to ask you, is your mother and father alive? If so, what's the age? If they're not alive, what was the cause of death? They're also going to ask questions about your lifestyle. Have you had any DUIs? What type of medications are you on, or have you been prescribed? Are you still taking them? Are you following up with your doctor? What's your recent status? Also, do you use any type of drugs? Do you have HIV, any type of STDs? Have you had any problems with your kidney, liver, lungs, heart, respiratory system? There are a lot of questions. A lot of the questions are yes or no answers. And if it's yes, then you explain further. And I always like to tell people, be honest, because what you may not tell me, it goes through a thorough underwriting process. And every decision that we make in life is stored in some type of database that impacts our insurability, whether that's for car insurance or homeowners insurance or life insurance, because insurance companies, the underwriters, are assessing your risk. how risky is it to insure your life? How risky is it to insure you with this car or this home? And that risk class, impacts your cost of insurance. So be honest, if you've been prescribed an opioid, that's nothing to be embarrassed about. Be honest about it, because when they're not, it creates a lot of questions from the underwriting department where you would have answered no, 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 no. And then there's a history that shows yes. Oh, that sounded like the Destiny's Child song. No, 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 no. When they know it's really yes, 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 yes. Okay, anyways. So, and then there is a section where you will have to share your personal banking information. For my clients, I do not take any checks from them at the time that I'm doing the application. I allow all payments to flow through the insurance company. So at the time of the application, you'll have to provide your banking information where you want the draft to occur. And that's pretty much it. So you have your basic personal information, you have your lifestyle section, you have a health section, your banking section, and that's pretty much it. And what I do so that my clients are not overwhelmed as part of my business workflow, once they've booked an appointment to actually do the life insurance e-application, they receive a copy of a blank application so that they're able to review and prepare and have all of the information ready at the time of the application appointment.
Nice. Now what was that about? Oh, I wanted to make a note. This applies to any type of insurance. Insurance companies work with third-party vendors. And like Ebony said, everything is fair game. We can find everything out. In my current role, I don't necessarily do this, but with my company, I was the vendor relations representative. So any of the underwriting information that would be used to assess someone's rating or like their risk group, I worked with those vendors to get that information. So when people call in, it's crazy because when I first started at the company, I was in the call center environment and I was supervising the team. So we would get, service calls or whatever, and people would lie all the time about their driving record. Like, of course, we're going to have access to your driving, but like even down to like people trying to rate jump. So they'll say that they live in a more rural area than like in a major city just to try to.
And it all comes up when you pull the background information.
Exactly. So the same goes, if you know that you have a medical condition or if you tested positive for something in the past, like be honest, because like she said, that's going to raise red flags. All they're going to do is pull the information to make sure what you said is valid. And if it's invalid, then you're a red flag. Like you're in a whole
Let's, you know what? I'm glad that you touched on that. Let's share with them, to the listeners, some of those vendors where they actually can. So just like you all have, or we all have, credit reporting agencies where we, most people may check their credit once a year and check their score. So the vendors for that will be TransUnion, Equifax, and Experian. There are also vendors that maintain a database of information to determine our risk, and it tracks a lot of things. So what I do each year, in addition to having a copy of my credit report, I pull my clue report, and the other one is Fact Act. I don't know if you've heard of those or not, but I
know about Clue, but I don't know about Fact Act.
Okay, so let's see here. I'm gonna pull it up while we're speaking here. So if the listeners, or this may be available in the show notes to them as well, you can obtain a copy of your Fact Act report, and it just has information on you in terms of just like your risk. Have you filed any loss claims? I found out about it by reading the fine print on something that I had, and then I just added it as an annual to do with, other reports that I pull on myself.
Yeah, wow. That's a good point. Like, and I've worked with like clue reports and stuff, and I never thought to pull my own.
Yes.
I'm glad you mentioned that. Is credit a factor? Because everybody knows that your credit is important. And I know on the auto insurance side, that is a rating factor. Now, when it comes to your life insurance, is credit taken into consideration?
So it's not in the same way. Like, there will be a question about bankruptcy, but it's not like if you have a 300 or 500 credit score that you can't get insured. But if you have a history of bankruptcy, I know that question is specifically on there, but I would not deter anyone from waiting until they felt like they had a great credit score to apply for life insurance, or feeling as if like, I don't want them to use the same mindset of, if my credit score is not great and I would have to take on a high interest loan, that's the same thought process for life insurance.
Gotcha.
Yes.
Okay.
So if there are any concerns with that, I would recommend that, they share that as a point with the agent. And our role as agents is, if there are any kind of outliers that we think may impact a prospective client's insurability, to first work with the underwriters, because if there are some concerns that could either have you denied or rated higher, it's good to work with the underwriters beforehand, so you're not submitting clients and they're getting denied. They could know this information ahead of time, because one question on life insurance applications is, have you ever been denied or rated for life insurance? And then that's another trigger, because if you have with another life insurance company, it's going to raise I don't want to say a red flag, but it's definitely going to be at the high attention of another life insurance company. So they're going to be looking at, okay, why were you rated? Why were you declined? So, just have open communication with your agent.
Got it. And with so many different life insurance companies out here, is there any indicator that people should look for when they're considering who they should get their policy through? Is there a financial backing, or
Yes, another great question. So just how we as consumers have a credit rating, so do companies. So some companies will be rated by AM Best, and you can ask your life insurance agent, what's the credit rating for the life insurance company that you're representing, or you could just go to the website of the life insurance company. And usually if you scroll to the very bottom of the page, there's usually in small print a financial section that will give you a management discussion analysis and other financial documents, and it will include the financial ratings for the insurance company.
Okay, got it. Well, all of this is super helpful.
Yes.
Before we tie things up, is there anything else that I didn't necessarily ask, but you think would be very important information for people to have while they're shopping around for life insurance, or if they need to review, like me, if they need what they actually have?
Here's what I would say. I always like to take the approach with life insurance is keep it simple at first. And with consumers, follow your gut. Because there are so many different ways agents can sell life insurance. And so the first need is always the death benefit, and any cash value accumulation and all the other benefits are added on, but understand what your basic need is first. I always like to tell people, be realistic with your budget. This is a bill that will come out of your household every month. So while you may need a $500,000 life insurance policy, if the cost of insurance is not within your budget, don't do it. Work with your agent to determine if you need to increase your face amount with either a due to a life-changing event, or you have additional income, and maybe during your 1-year follow-up, you say, hey, I'm at $250,000, and I could afford to pay $50 more in premium. How much more coverage can that get me? But stick to your budget. Because what happens is people will enter into a life insurance contract, and then when they have a financial hardship, what's the first bill they'll stop paying?
Life insurance.
And then they're like, oh my goodness, I paid into this policy for 3 years, and now I'm told that I have to pay this amount of money to catch up my premiums, or I'm going to lose the policy. And then there's other fine print, like say for example, you allow your policy to lapse, and then you are able to catch up the payments and you get it back on track. But some insurance companies will have fine print that says, if you were to pass away within so many, months or years with getting the policy back active, that they may not pay the full amount. So you just have to know what you're getting into. And while you have an agent that's representing you and the insurance company, just read, do your research, ask questions, and don't be afraid to get a quote from more than one agent. But also know that some consumers can be overwhelmed with that as well, because they don't know if they're comparing the same product. One agent may sound, one way and they feel comfortable, but then they like the price of another agent. So just be smart about your decisions, but also keep it simple. It's life insurance. We know we need it. Determine what your budget is before you go into this, and look at solutions that meet your insurance needs and your budget.
Got it. Makes sense. Okay. And now, if people are interested in talking with you more, or getting a policy through you, how can people reach you?
So you can reach me at ruffinconsultingservices.com, and it's spelled exactly how it sounds, Ruffin, RUFF as in Frank, IN, consulting services with an S.com. On the website, there is an option to schedule an initial life insurance consultation. And you're also able to browse around on the website and, look at the services that are offered. But I take my time with my clients, and, I always recommend, most people want to send you a quick email or a DM or a text, but I have a process in place for a reason. And that process is in place to not just focus on the sale of insurance, but to educate my clients first and help them also understand what their needs are. So the best way to get in touch with me is at ruffinconsultingservices.com. I'm on Instagram, Facebook, and LinkedIn, all at Ruffin Consulting Services. Again, everything is efficient, organized, streamlined. So if you make the attempt, you'll definitely get the response.
Nice. Look at you, all so professional and well put together. I love it. I love it.
Life insurance too is outside of the coverage, people need to feel comfortable and confident with who they're working with. And in order to create that space where your clients can trust you, you want to have everything together, and you want to give them the real you, but do it in a professional way. You're working with someone's personal information, a sensitive topic. And when doing that, it's important to set the tone from beginning and be consistent all the way through the end.
Amen. Amen to that. Well, thank you so much for being a part and saying yes to be a part of the Money Moves series. I do have a question though. I like the shirt that you have that says it has fish fry, GoFundMe, like all of that's strike through, and then it has life insurance. Do you sell those shirts?
Absolutely. So, thank you so much for sharing that. So, when you go to ruffinconsultingservices.com, part of my responsibility in changing the narrative of life insurance is realizing that people receive information in different ways. So, while it's great that I know all this stuff about life insurance, some people may not want to get on the phone and talk with me, or they don't want to go through a consultation, but maybe they want to wear apparel that sends the message that they support a proactive approach to life insurance, which is life insurance planning, and not a reactive approach, which is a last minute GoFundMe page, a cookout, or a fish fry, which, I don't care where you're from. I'm sure most people have heard of it. They've seen it happen in and around their communities where people will pass away and there has not been any proper planning. And so people turn to things that, will allow a mass number of people to contribute to someone's burial expenses. And that's being reactive in life when we could be proactive. So if you go to ruffinconsultingservices.com and you tap the shop button, there's a link to the luxury life insurance t-shirt under apparel. And then I also have a life insurance buyer's guide so those that are, independent, they like to read, do their own research. I created a buyer's guide to help consumers be more confident in knowing what they need and why they need it. So when they go speak with an insurance agent, they have a piece of knowledge, with them already.
Nice. Wow. Well, this was all so helpful. Again, thank you so much. Listeners, again, if you can do us both a favor, share this episode, because I'm pretty sure even if you have a life insurance policy, it has not been explained to you the way in which she's explained it today. So if you can just do us both a favor and just get the word out, get this episode out, and people will thank you later.
Yes.
I know I'm thankful.
Yes. And thank you for having me on as part of your Money Move series. Thank you, Yellow Room family. And we all support you in what you're doing. And I love that your podcast is just real, because you're talking about financial decisions, you're talking about marriage, you're talking about relationships, you're talking about, comparison of growth. You're also throwing in the religion aspect to it. So you're really kind of like, our girlfriend away from our girlfriends, or a great resource where we could hear another perspective if we don't necessarily want to have the conversation, with our close female friends or our family. We could listen to how you're conducting and share the episode. So you have a great resource for us. And I'm very appreciative for what you're doing with the Yellow Room podcast.
Thank you so much. That just melted my heart. I'll be right back after this message. Thank you so much for tuning in for another episode. If you are new here, please consider subscribing on whatever platform you're listening in on today. Leave me a rating, leave me a review, comment, whatever you feel that you want to do. If you already consider yourself a part of the Yellow Room family, please consider making a small monthly donation to sustain and contribute to my growing platform. No amount is too small. Donations can be made at anchor.fm/theyellowroom/support. If you are unable to, I still love you just the same. You can still support me by listening, sharing, and providing feedback. I thank you all so much, and I appreciate your continued listenership. Thank you.